Hello, ding-dongs and ho-hos. Are you ready to add some Jaffa cake to your biscuit tins? My name is Mark Wanker, and this is Capital Anchor, a channel for beginner finance and investing tips. And I'll break down some of my stock picks for this year so you can start building wealth with guidance and understanding. I create these videos based on the stock I have bought. I will never recommend a stock that I am not willing to buy myself. Join me as we take this investment quest together and re-watch my videos to see how right I was about my stock picks. No BS. There is no investing without risk, so exercise wisdom and an open mind. I've also added a bonus stock pick at the end of the video that's perfect for new investors as well as dusty, old crotchety sods who lost all their money betting on Beanie Babies and Pogs. 2025 is actually a great year to invest. When others panic or are uneasy, that's the time to buy. Despite recent market volatility, tariff talks, and inflation concerns, the S&P 500 is still up over 25% since early 2024, and analysts predict modest gains in 2025, with an average S&P 500 target of 6,056, about 3% above 2024's close. Economic resilience and AI-driven innovation are fueling opportunities. In fact, some of the stocks I have chosen are from companies I used to make this video, including Adobe, which I use for editing and stock footage, as well as artificial intelligence used for my voice. Because if I used my real voice, you would find out just how bloody American I really am. No matter how many times I say, "The satchel is in the bin," or "Bob's your uncle." Anyway, invest in what you know. And if you don't know what it is, or you don't understand it, don't buy it. Today's 7 stocks are chosen for growth potential, companies poised to outperform, stability, established names with strong fundamentals, accessibility, affordable shares, or high visibility. We'll cover tech, finance, healthcare, and more for a diversified portfolio. Grab a notebook and let's explore these picks. First up, SoFi Technologies, ticker SOFI, a fintech disruptor. Trading at $11.74 today, it's down from $13.70 a month ago, but up 73% from April 2024's $6.78. Why SoFi? It's a one-stop financial app offering loans, banking, and investing. With 8.8 million members and 26% revenue growth in Q3 2024. It's on my phone, so it's in my portfolio. Despite not being fully profitable, SoFi's push toward a financial super app and a $3.2 billion loan platform expansion signal big potential. Analysts predict $8.89 to $14.94 by year-end 2025, with resistance at $18. For beginners, SoFi's low price and growth story make it a high-reward pick. A much better pick than the wench from Glastonbury that I married. Next up, Alphabet, ticker GOOGL, Google's parent company. At $155.25 today, it's down 24% from January's $204.02 high, but up from last April's $162.78. Alphabet dominates search, cloud, and artificial intelligence, with Q4 2024 ad revenue expected to grow 10%. Its $200 billion artificial intelligence infrastructure investment fuels growth in Google Cloud, a key 2025 driver. Despite tariff risks, Alphabet's diversified revenue and $70 billion buyback program add stability. For beginners and well-seasoned overcooked investors, Google offers tech exposure with voting rights, unlike women in Iran, and unlike Class C, ticker GOOG. It's a solid long-term hold. If you have the crumpets and you're an alpha, bet on this stock. Third, PayPal, also known as "What happened to that $600 I sent to my brother in 2004?" Ticker PYPL, a leader in digital payments. At $62.46, it's down from January's $88.58, but steady from last April's $67.92. PayPal processes billions in transactions, with Q4 2024 payment volume up 9% year-over-year. Its focus on artificial intelligence-driven personalization and Venmo's growth make it a 2025 contender. Analysts see PayPal climbing to $70 to $80 if it sustains profitability. For beginners and salty old tossers, PayPal's household name and sub-$100 price offer accessibility and growth in the cashless economy. Because cash is for degenerates and people who don't call their mum at least every 2 weeks. Fourth, or as you Americans like to say, Quattro, Southwest Airlines, ticker LUV, a budget airline favorite. At $25.52, it's down 24% from March's $33.58, but stable from last April's $25.94. Southwest's focus on cost efficiency and domestic routes positions it for recovery as travel rebounds. Q1 2025 earnings are expected to show improved margins despite fuel costs. With a low share price, Southwest is beginner-friendly for those betting on travel's long-term growth. Just watch for tariff-related cost pressures. I don't fly, but if I did, it would be in your dreams and on Southwest Airlines. Fifth, and in no particular order, this one is a favorite though, Adobe, ticker ADBE, a creative software giant. At $351.96, it's down from January's $437.45 and way off 2024's $574.41 peak. Adobe's Creative Cloud and AI tools like Firefly drive growth, with Q4 2024 revenue up 11%. Its artificial intelligence integration keeps it ahead in content creation, a 2025 megatrend. Despite a high price, Adobe's stability suits beginners and crusty old codgers seeking tech exposure without startup risks. Analysts expect a rebound to $400 by mid-2025. And speaking of crusty old codgers looking for exposure, well, best I save that story for my therapist. Sixth are the mystical, indestructible seeing stones, dark, perfectly spherical orbs, varying in size from about a foot in diameter to much larger. Crafted by the elves of Valinor, specifically Fëanor, they were gifted to the Númenóreans and later brought to Middle-earth. Each stone allows its user to see distant places, or as you Yanks call it, Palantir Technologies, ticker PLTR, an AI and data analytics leader. At $100.80, it's up 23% year-to-date and 358% from last April's $21.97, making it a top S&P 500 performer. Palantir's Maven smart system for NATO and commercial AI platforms fuel its rise. While its high valuation raises concerns, analysts see Palantir hitting 120 if AI demand holds. Beginners and greasy old farts can ride its momentum, but should be cautious of volatility. It's like an insatiable woman. Lots of momentum, but volatile. Last, United Health Group, ticker UNH, a healthcare titan. At $427.96, it's down 18% from March's $523.75, but up from last April's $483.70. United Health's insurance and Optum services drive steady revenue, with Q1 2025 earnings expected to grow 7%. Their motto, We care enough to give you great treatments, but not enough to cure you. This is bound to make money, maybe enough money to pay for healthcare. Its scale offers stability despite recent volatility. For beginners and smelly geriatrics, United's higher price is justified by its defensive nature. Healthcare is recession-resistant. Expect a climb toward $500 by late 2025. I also hear they cured cancer. I don't know where I heard it. Maybe it was in a dream. The one with the giant snake dressed like Madonna. This is the part where I sell myself like a cheap streetwalker from Wales. You know who I'm talking about. Which stock did I get wrong? Drop it in the comments so I can tell you how wrong you are, and we can have long, pointless, heated arguments on the internet. Hit that like button because there is no love button. And subscribe to Capital Anchor for more average but hilarious tips. Now, let's wrap up with a bonus pick to diversify your portfolio. For a bonus, consider the SPDR S&P 500 ETF, ticker SPY. At approximately $500, it tracks the S&P 500, giving you exposure to 500 top companies, including Apple, Microsoft, and our picks like Alphabet. It's perfect for beginners and sweaty bum-grabbing curmudgeons wanting diversification without picking individual stocks. There you have it, lads. 7 stocks to jumpstart your 2025 portfolio. So Phi, Alphabet, PayPal, Southwest, Adobe, Palantir, and United Health, plus the SPY ETF for diversification. These picks blend growth, stability, and accessibility for beginners and knackered old coffin dodgers. I'm Mark from Capital Anchor, where we simplify wealth building and dodgy humor. Subscribe for more average stock and finance tips and hit the bell to keep the missus happy. Comment your least favorite stock below. Mine's the healthcare one for its love of death. Thanks for watching. I'll see you fellow wankers soon.